DuPont innovation lowers LCOE by increasing cell efficiencies and system lifetime while reducing total system cost. Materials matter.
Hello and welcome to the PV Tech Newscast. This week we'll be looking at predictions and PV news from around the world, including the US pipeline, China's retaliation to US import duties, collaborations in the EU, and exciting developments in new and emerging markets. At the end of 2013, based on annual market demand, the top 10 states for solar PV in the US had a total project pipeline of approximately 2,000 non-residential projects, which represents almost 40 gigawatts of potential PV capacity. California dominates the pipeline with over 60% of capacity, firmly cementing its place as the leading US market. In fact, if California alone was compared on a global level, it would have ranked as the fourth largest market in the world last year. States with smaller pipeline levels may be in danger of declining year on year as project development activity slows down and current pipeline activity is depleted. Conversely, states that rank higher in terms of project pipelines may see strong demand growth in the coming years as projects start to be completed. China has slapped fresh duties onto imports of solar-grade polysilicon produced in the US and South Korea, applicable for 5 years. The news emerged as the US Department of Commerce prepares to decide whether or not the US's own anti-dumping and countervailing duties on solar products will be applied to a broader range of Chinese manufacturers than originally stated. The latest move from China in the ongoing dispute came following an accusation of anti-competitive activities by Chinese and Taiwanese PV manufacturers lodged by US manufacturer SolarWorld on the last day of 2013. According to Reuters, the latest measures announced by China's own Ministry of Commerce were in line with initial duties levied from last year. The ministry concluded that below-cost sales in the Chinese market by South Korean and US companies caused substantial harm to Chinese producers. Beleaguered Suntech Power Holdings has received notification that it has once again failed to meet criteria for listing on the New York Stock Exchange. The company said its American depository shares had failed to reach $1 per share over a 30 trading day period. The company's shares were suspended from trading on the NYSE in November last year. Should it be reinstated to the New York Stock Exchange, Suntech Power Holdings noted that it had 6 months following receipt of the notification to regain compliance. The company added that it intended to cure this deficiency within the prescribed time frame without providing further details. The company is currently undergoing bankruptcy proceedings in its registered domain of the Cayman Islands and Chapter 15 liquidation in the US courts, protecting it from creditors in the US. Suntech's manufacturing operations in China have already been sold under Chinese Insolvency Administration to Shunfeng Photovoltaics. The possibility of a binding renewable energy target for the EU is back on the table at negotiations in Brussels. The current draft of the new 2030 centrepiece of the bloc's climate and energy policy calls for a target of either 27 or 30%. A 24% target, which would represent business as usual, has been ruled out. While the current policy includes the word binding, it is unclear whether this obligation would fall on national governments, creating a powerful incentive for action, or a softer binding goal for the EU as a whole. On Wednesday the 22nd of January, a raft of new proposals will be announced, including the 2030 Climate and Energy Package. The plan still has to be written up as formal legislation and approved by member state governments. Its predecessor, the 2020 plan, set 20% targets on greenhouse gas reductions, renewable energy generation, and energy efficiency improvement by 2020. A 30% target would be split between the 28 EU member states, with economic factors and a country's current energy mix and potential for renewables weighted to shed the load proportionately. India's Ministry of New and Renewable Energy has released figures revealing more than 1 gigawatt of grid-connected solar was installed last year, taking the country's cumulative total to 2.18 gigawatts. In the month of December 2012, 2.5 megawatts of off-grid solar was installed. However, in December 2013, 5.4 megawatts of off-grid was put in. The cumulative total for installed off-grid solar was 144 megawatts compared to 106 1 year before. India's national solar mission, which uses government tenders and reverse auctions, as well as many state-level policies, has helped to rapidly grow India's solar generation. India is still pushing forward with ambitious solar targets. In September, the ministry set a target of 10 gigawatts of solar to be installed by 2017. The Middle East and North Africa could see investment in solar reach $50 billion by 2020 as governments push to exploit the region's huge resources, research claims. A report published by business intelligence firm Mead Insight in conjunction with the Middle East Solar Industry Association estimates that up to 15 gigawatts could be built in the region by 2020 as part of a much bigger drive towards renewable energy. While the region had only a small 217 megawatts of solar installed as of this month, the report predicts this situation will change radically over the next few years as governments embrace renewables. The process would be driven by the increasing strain on fossil fuel resources, the report said. The report also highlights Saudi Arabia as having the largest potential solar market in the region, although it picks out a number of other countries that have set ambitious solar targets, including Morocco, Egypt, and Algeria. And that concludes this week's whirlwind tour of global PV news. Join us again next Tuesday, and in the meantime you can keep up to date with all the very latest news via our website and our Twitter feed. Thanks for watching.